What's good on my trader and investor homie? It's your boy Kevin. This is Touchdown Trades. Jerome Powell of the Fed just crashed the market with what he said about inflation, and Cathie Wood of Ark Invest came out and said she absolutely loves this pullback and she's buying the dip. So in today's video, we're going to be breaking down what Jerome Powell of the Fed said to cause the market to pull back. We're going to break down what Cathie Wood said, and we're going to talk about my opinion on all of it. If you're new to the channel, we talk about the hottest stocks in the market every single day. So do me a favor, hit that subscribe button, turn on the notifications, and everybody go down there and like the button. I'm still here at the beach, still working though, still buying the dip on a bunch of these growth stocks that are trading at huge discounts. Haven't seen my portfolio bleed like this in a long time. My portfolio has a really bad case of diarrhea. It keeps all my money out, but I like it. And we're going to talk about why I like it and why I keep buying in this video. We're going to talk about some of the stocks that I like most on this pullback. We're going to be breaking down what the Fed and Cathie Woods are talking about. All right, so yesterday, Jerome Powell, the chair of the Federal Reserve, came out and said that inflation is going to stay at the rate that it's been at. Right now, investors are scared that inflation is about to go through the roof. Investors are scared that interest rates are about to get hiked. And Jerome Powell basically came out and said, no, you're all wrong. You're all wrong. We're going to continue with quantitative easing. We're going to continue anchoring these inflation rates, and we're going to keep the money printer rolling. So why is the stock market selling off if Jerome Powell is arguing against what all these investors are scared of? Well, here's why. So first, we need to understand what inflation is. So inflation is basically the U.S. dollar can't buy as much of your everyday needs as it would a year ago. So for example, a year ago, a gallon of milk maybe cost $1, and then this year the gallon of milk cost $1.50. Another example, your favorite exotic dancer, Cinnamon, at the local gentleman's club, a year ago, a table dance from Cinnamon maybe cost $20, but then the next year you go to get a table dance from Cinnamon and that dance cost you $40. That is inflation. So Jerome Powell is saying that no, inflation, it just looks like inflation is coming because when the Rhinoceros Rex came out last year, everybody dropped prices because nobody was buying anything, and as we get back to normal, those prices are going to go back to normal, and that is just looking like inflation. It's pseudo-inflation. It's not real inflation. But investors are finding this hard to believe because he keeps printing money. The M1 money supply chart, which measures the amount of cash that's out there on any given day, looks like a penny stock chart. It's gone to the moon. So basically, Jerome Powell is saying, no, nothing to worry about here. Keep buying stocks, keep investing your money, and investors are saying, screw you, Jerome, I don't believe a word you're saying, and everybody's panicking out of the market. So what did Cathie Wood say? Here's a little clip of what Cathie Woods had to say on this recent crash.
When investors and speculators are selling our stocks, creaming them, our highest conviction stocks, we won't be buying them. When they are hyperventilating about our stocks, we will be selling them. We will be taking profits because we know there will be another source of controversy. We'll get another bout of volatility.
So Cathie Wood basically said what I always say, buy the dip, sell the rip, baby. She says scared money don't make money. That's literally what she said. She said, if you're scared, tuck your tail and run away, and I'll buy what you're selling. She is saying that this dip, this crash, if you want to call it a crash, is not going to last, and they are going to keep buying their highest conviction stocks. Her highest conviction stock is Tesla. We all know that her favorite stock is Tesla. She has a price target of way high on Tesla stock. So I have the Ark Fund ETF pulled up here, and we can see that the Ark Fund has really taken a beating over the last couple of weeks. It's given back all of its 2020 gains in just this last couple of weeks. We hit highs of 160, and we are currently trading at 110. A really steep pullback here on the Ark ETF. So I absolutely 100% agree with Cathie Wood. Panic selling is happening right now. That's why we are seeing the growth stocks sell off the hardest. The overall market is not even down that much. The S&P 500, the NASDAQ, they are not even down that much. Look at this S&P 5, this SPY chart. We were hit highs of like 395 or so. We're trading at 374. This is a normal pullback. Look at the last few pullbacks of similar magnitude. We had one here, we had one right here on the SPY, another one here, and another one here. Those are very similar pullbacks, and every time it happened, what everybody was crying, crash, 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 retail and panicked out of their positions, and what happened? They all got bought back up, and I see a similar thing happening here. Sure, it's scary. My portfolio is down 15 to 17% as I attack growth companies as my primary investing strategy. It's no fun to wake up and look at your portfolio down. I'm currently down, and that sucks, but it's just part of the game, and this is a buying opportunity. And retail is panicking out of their positions, and the smart traders and investors are going to be 100% buying the dip on these stocks. Look at Tesla. You're telling me Tesla trading at $560 right now is not a good buy? Of course it is. Sure, it could go to $400 per share. There's no doubt about it. Tesla could pull back to 400. It could pull back to 350, but it's a buy the dip. Nobody can predict the bottom. Nobody. If anybody says they can pick the bottom, they're lying to your face. So what your only option is to average in, buy, cost average down, and when it rounds out and breaks all-time high, as it 100% will do, and maybe 1 year from now and maybe 3 years from now, you have a cost average of, let's say, 450, and then when it breaks 900, you've doubled up on that position. So I 100% agree with Cathie Wood that this is a buy the dip opportunity as scared retail money panics out of their position. I don't necessarily think Jerome Powell is lying, but here what he's saying is also kind of scary. He's saying that we have not yet recovered, and we're not going to be recovered from what happened during the Aronosaurus for a few years. So basically he's saying that the Fed is going to continue to prop up the stock market until we are fully recovered from the Rona. And that's good and bad. But from an investor standpoint, it's good because he's saying basically, if you're decoding what he's saying in the cryptic messages of the Federal Reserve, he's basically saying he will not let the stock market fail, that he is not going to hike up interest rates, that he is not going to let inflation run away. And I don't, as a free market kind of guy, I don't necessarily believe in the Federal Reserve stepping in and propping up the stock market, because I think the long-term implications are going to be bad, right? Anytime government injects themselves into financial industry is not good in my opinion. But from a short-term, couple-year perspective, I think this is a buy the dip opportunity, and I will be attacking these growth stocks that have sold off so hard. I've been buying Hyliion left and right. Every single day I'm buying Hyliion. It's fallen off a cliff, and yeah, I'm down a good chunk of change on this position, but I have no doubt about it that this thing rounds out and is a $30 stock within the next couple of years. What's happening is these companies, these EV stocks, these are stocks that are primarily owned by your retail investors. And retail investors are known for getting scared and panicking out of their positions. And this is a clear example of panic selling. Look at Tesla. Tesla, this is 100% panic selling. And we're coming into the 200-day EMA. That's where institutions will step in and buy. Cathie Wood of Ark Invest is already saying that she's adding to these positions. So I think we see a pretty fast V-shaped recovery on a lot of these growth stocks. Some of them, it may take longer than others to get to recover fully, but as buying comes in, as retail says, wait a second, maybe we did make a mistake, maybe we panicked out of that position too fast, retail comes back in, I think we're going to see these things recover pretty quickly. Another way I know this is probably a short-term insignificant pullback is that Jim Cramer is calling this a real sell-off, or basically saying that the crash is about to happen. And if you follow Jim Cramer at all, you know he loses money and he's typically wrong. So whenever Jim Cramer is calling for a crash, the opposite is probably going to happen. So I'm looking at this as a fade the Jim Cramer kind of trade, and I'm going to be buying more as these stocks continue to drop. Sure, they can continue to drop. There's no doubt about it that these things may sell off more. Tesla could sell off more. Hyliion, these EV stocks, Lucid Motors, NIO could continue to drop, but as they continue to drop, I will continue to buy, because as the panic subsides and money starts coming back into the EV space, I want to be long, I want to be full size, and I'm going to ride the wave back higher. One more sector I want to talk about are these Bitcoin mining stocks. You guys know I've been a little bit critical on these Bitcoin mining stocks as I have concerns of their longevity and their profit potential a few years down the road as Bitcoin becomes harder to mine. I am a big Bitcoin bull. I like the underlying Bitcoin buy typically better than these mining stocks, but right now at these prices, I think these Bitcoin mining stocks are a good dip buy opportunity right now. We have two trend lines coming together on Riot. You have this long-term complex trend line combining with the support area at $30, and I think this area holds, and we round back out and retest $55, $60 per share. So that is a good short-term buy the dip, sell the rip opportunity, in my opinion. So just to wrap things up, I do think the Federal Reserve is going to continue to prop up the stock market, and I think we see the rebound happen over the next couple of months. I think the panicking subsides, the weak hands have already folded, the scared money is already out of the market, and this selling pressure will subdue over the next couple of weeks. I know it sucks. I'm in the same position as a lot of you guys. I wake up every morning, the past couple of weeks, down another few percent. The next morning, down another few percent. It absolutely sucks, but there's no way to pick the bottom. If you're saving all your cash and trying to throw it at the market all at one time, hoping it's the bottom, you're probably going to be wrong, and that's just the hard truth of the matter. So I'm buying, slowly adding into, scaling into my position, and I will continue to do so. I love all of you guys. I'll catch you guys in the next video. Until next time, peace.